Okay, now I'll get to the second part of ABC. Now there is 4 different types of activities that are identified by these managers, and these are the total MOH that are allocated to different types of activity costs. And the managers also determine what is the right activity drivers. So for example, in order to identify and allocate the cost of ordering materials to different type of cost objects, they're going to depend on the number of orders, right? And for allocating the cost of maintaining machine, they're going to basically based on how many units are produced. Okay. In order to allocate the manufacturing support cost, let's say the manufacturing support would usually vary with the sophistication of manufacturing processes of different products, right? So the more steps you have in the manufacturing processes, the more sophistication you require and therefore greater support expense. Others are some unclassifiable manufacturing overheads, and the managers would use the labor hours in this case. So let's say if you have all these manufacturing overheads and activity bases of each activity cost pools, you can also calculate the activity rate as by dividing the total MOH by the total activity base, right? So $100 per order and $25 per units produced, $1,250 per step, and $100 per labor hour, right? And this is the rate we are going to apply when we are going to allocate to different type of cost objects. Okay? So the following on the above is just what we have calculated. And we're going to use that when we are now going to allocate towards hiking packs and tents. And let's say these are the consumption of each type of activities. Okay, based on these and based on the activity rates that we have calculated, we can multiply the consumption of activities times the activity rate. Okay, so you will see what I mean, right? $25 per unit, 10,000 units produced, $250,000. Just likewise for tents, $1,250 per each step. So 150 steps times $1,250, 50 times $1,250. And lastly, we're going to apply based on labor hours. So $100 times 1,000 and 500 times 100. Okay, so all these are applied based on the each activity rate and consumption of those activities, and then basically we add up to get the total MOH allocated based on the activity rates. Okay. Now let's move on to the other case. I will not repeat this because it's a bit repetitive, but let's say there are these 3 different product A, B, C, and there are these 4 different type of cost pools where cost drivers are also identified, right? And these are the total activity consumptions across different cost objects. So basically, you would allocate based on each activity rates, right? But before looking at the solution that I will lay out to you in the next slide, please give yourself 5 to 6 minutes to make your hands dirty first. To give you a hint, you can first divide the total MOH by the total allocation the total consumption of each activity, right? So for example, the number of design hours, so you would add up all of these 3 design hours across different products to get the activity rates. And then basically you would multiply by each design hour with that activity rate to come up with the design engineering costs applied to each type of products. Okay? The likewise for the setup costs, quality control cost, and shipping costs. Okay? So assume that you are done with it. First, showing you with the activity 1, design engineering, you would first have to no, calculate the activity rate, which I have done at the same time by multiplying with the consumption of those activities. So these should be the appropriate number that you would also come up with. The likewise for the setup costs and the quality control costs, the packaging costs, right? And then lastly, you would have to calculate by adding up all these costs. Okay. So if you're not really used to what's going on, first do the review on the previous slides. Okay. First, you have to come up with the activity rates, multiply that by each consumption of each activity. Then you would get each of these activity costs applied to different type of products. So across these 4 activities, you would do the same and then add up all those costs, right? But there are surely some limitations of ABC. The first is it requires a lot of substantial resources. It's really time consuming. And the reason is because you first have to identify what kind of activities there are in our manufacturing overheads, right? That itself takes a lot of time and energy investments. Even if you do identify correctly what are the correct reasonable activities, for each type of activity, there are different activity drivers. And each activity driver have different activity rates. Activity rates have to be recalculated every different single estimation period based on different budgeted activity costs and activity drivers. So managing those activity rates is also very costly. And even more costly is that for each different cost, for each different cost objects or let's say different products, you have to keep track of how many activity resources are used, right? And that is really time consuming from the point of product managers or departmental managers where they have other strategic prioritization, right? They cannot always keep track of all their time resources on how much resources are used for different type of activities. A second, if this is your first time implementing ABC in your organization, it can raise a lot of initial resistance because employees and managers, they want to always be familiar with what they already have. But ABC itself is a very innovative system. It requires lots of new education, new information, new knowledge, requires lots of get to know time. And people may have initial negative reactions towards getting familiar with all those new resources. Third, ABC does not get away with gap between the budgeted level of activities and actual level of activities. What does this mean? So even if we use this refined costing system ABC, we still have to calculate the activity rate based on the predetermined level of activities. And if we use those predetermined level of activities, towards the end of the period, we will still see the discrepancy between the actual cost that has incurred versus the allocated cost under the ABC. Therefore, we cannot get away with not having any gap between the total cost incurred and the allocated cost. because we are relying on the predetermined activity rate. Lastly, this is not a way we use under financial reporting purposes. So under financial reporting, either GAAP in the US or IFRS in Korea or Europe, we use what's called the absorption costing, where we apply the fixed resources to the cost of goods sold. The counterpart of the absorption costing, which we will learn from chapter 9, is called the variable costing, where we don't consider the fixed resources to be included in the COGS. But the key important difference between the absorption costing, the variable costing, is whether or not we apply and include the fixed resources in the cost of goods sold. And if we do include those fixed resources, then we say we apply absorption costing. When we are applying the fixed resources to the COGS, we usually use the volume-based drivers, like the units produced or labor hours or machine hours. So something that's related to provision of outputs, okay, rather than using a more sophisticated approach like ABC. So since GAAP or IFRS does not allow more sophisticated drivers to be used to apply fixed resources to COGS, we have to have a different separate reports for internal reporting purpose and external reporting purpose for the outsiders, which is again a costly process. We don't want to have a very inconsistency between internal reporting and external reporting, right? And one of the reasons is because it itself is really cost and time inefficient. So in the matter of financial reporting, many managers may resist from transitioning from the traditional job costing to the ABC costing. Okay, so this is another example question that I want you to go through. So I'll give you about, again, this would take about 15 to 20 minutes. Please spend some time on it. And then after done, we can come back and see the solutions together. Okay, so this company is a large store that sells cakes and pies. It also has a coffee shop. Yummy operates at capacity and allocates the SG&A to each product using the cost of merchandise of each line. And this company now wants to optimize the pricing and cost management, so they are wondering whether they can provide the best information for making such decision and is considering using AABC. So we're going to deal with the first and two questions. The first question is, if Y uses the cost of merchandise to allocate all the SG&A administrative cost, how would the income statement look like at a product line and at a total company perspective? Okay, so let us first look at the total SG&A expense, which is given right here, right? And number one is not about ABC, it's about the job costing. And we need to first calculate the plant-wide overhead rate, right? By summing up the total cost of merchandise right here across three different cost objects, right? Then we can spread this SG&A based on each cost of merchandise consumed, okay? So that's basically it. So the total cost of merchandise is the sum of these cost of merchandise across three cost objects, which is $5 million. So the approach is to allocate the manufacturing overhead by each cost of merchandise proportion. Okay, so these are the numbers. Then the operating income will be nothing more than the revenue minus the cost, right? So revenue minus the cost of merchandise minus the SG&A incurred. Okay, so cake and pie. One difference from the coffee shop is that you will see $20,000. Okay, so the $20,000 is a total direct SG&A cost traceable to the coffee shop right here, the cost of coffee shop cleaning. So this is one more item that you shouldn't miss on top of subtracting the allocated SG&A. Okay, so $129,000 is something that you should be getting. So in total, the operating income should be about $470,000. Now, when we allocate using the ABC, let's go back to the problem. Okay. So now they are going to use the ABC, and the allocation drivers are right here. So let's say for the purchasing department expense, right? The right allocation driver is likely to be the number of purchase orders placed. Right? Receiving department expense. So this is related to how many deliveries received across different cost objects. So the deliveries received is going to be the activity driver. And then for the shelf stocking labor expenses, let's say this hours of shelf stocking time is the right allocation base. Oh, by the way, for the ABC, because we're trying to make the cost driver as closely as possible as the cost allocation base, I'm going to interchangeably use the activity base with the activity driver. So both concepts are pretty much similar in the context of ABC. Okay. And lastly, the customer support expense for selling items will usually vary with how many items are sold across different cost objects. So the last item right here is gonna be the appropriate driver. Okay. Based upon that, well, intuitively speaking, the first thing you should do is to calculate the activity rates based on each drivers. Okay, so you should sum up all these three items. And also for receiving department expense, $440,000 divided by the sum of the total deliveries received, right? Or the shelf stocking expense, $490,000 divided by the total hours of shelf stocking time, da da da. So once you do that, once you figure out those activity rates, then you can apply to each product line. Okay. So in this case, I have first summed up all the allocation bases, as you can see, by different activities. And then this is the number that we use as a denominator, and then calculate the proportion of each allocation basis used by different product lines, and then multiply by each activity cost pools. Okay. So I will show you the numbers, maybe pause a little bit and see if your numbers are in line with the numbers here. And then the operating income would again be the revenue minus the cost of merchandise and the sum of all these activity costs, pi as well. And then for coffee shop, again, it's important to further subtract the direct operating cost of $20,000. And then you will actually see a negative income. But the total operating income itself of $470,000 should be in line with the operating income under the job costing, the first question. Okay. All right. Now there's another question that you can stop a little bit and I will show you some solutions. Especially I'm going to focus on number 1 and number 3. I'll leave it to you for the number 2, but the approach is going to be basically similar. So this company makes trophies and plaques and operates at capacity. Triumph does large custom orders such as participant trophies for the Minnetonka Little League. And the controller has asked you to compare plant-wide, department, and activity-based cost allocation. Okay, so this is the budgeted information ended November 30th, 2019. So you're seeing the direct labor cost, material cost, as well as the overhead costs for different departments. Another thing to note is that the setup cost is going to vary with the level of batches processed in each department. Okay. So these are the number of batches for each product line in each department. And that's going to be used when we are applying the ABC. In number 3, and let's say the supervision costs in each department usually vary with the labor cost. Okay. Let's first figure out number 1, the plant-wide overhead rate. So this is nothing more than to lump everything together. So the manufacturing overhead cost is going to be the sum of this 2 and this 2, right? So the denominator is going to be 112,692, and then basically the way the allocation base is the total direct cost, right? So the total direct cost means to add up the direct material cost and direct labor cost across different departments, right? So the sum of this 4 right here. So the denominator is going to be 158,250. Okay. And then our job is to allocate this manufacturing overhead to different product line, trophies and plaques, right? So as for trophies, we're going to apply this overhead rate by multiplying by the sum of 26,000, 31,200, 5,200, and 15,600. I see some typo here. This should be 0.712 instead of 1.712, right? And also for plaques, you need to add up all these direct costs across departments to come up with this number. Now, this is going to be our third question on the activity rates. Again, I'm going to leave to you on calculating the departmental overhead rate and applying that to each products. So here we have 4 different type of overheads, right? Now, as said in the problem, the setup costs usually vary with the number of batches for each department. So for example, when we are calculating the forming setup cost, what do we need as our denominator? We need the total number of batches in forming department, right? Which is right here, right? We need to add up 40 plus 116 to come up with the setup activity rate, which is about 153.85 per batch. Now for the forming overhead rate, the problem does not actually give you what exactly the general overhead is. But let's say the general overhead has to do mostly with the supervision cost. And the problem has also shown you that the supervision costs usually vary with the labor cost. Okay? If you see it right here, vary with the labor cost in each department. So the right activity rate here is going to be dividing the 2772 here with the total labor cost in the forming department, which is 49,200. So 0.422 per dollar of the labor cost. For the assembly setup activity rate, it's also going to be based on the total batches in the assembly department. So we're going to add up the 43 and 103 to come up with the setup activity rate. And then lastly, the assembly department supervision cost is going to be 21,920 divided by the labor cost of 36,600. So 0.599 per dollar of labor cost. Okay, so these 4 different rates are going to be used when we are applying to different product lines. Okay, so starting off from trophies, it's going to be 153.85 times what? The 40, right? Right here. Plus 0.422 times labor costs of 31,200 plus 315.07 per batch times how many batches in the assembly department for trophies? 43, right? So times 43 plus 599 times the labor cost in the assembly department for trophies is 15,600. Okay, so this is the number that you should get as well. Of course, you would have to add up all the direct material and direct labor costs in all across departments. Okay. For plates, I'm not going to repeat how it's done, but you should first add up all the direct costs and then apply based on the consumption of each activity in each department. Okay, so this is also quite similar. For this one, this is I would have to say a lot of repetition with different previous question sets. So I'm going to leave the solution to you. I will post that on the board. If you do have questions still, then you can always ask me through email or after class. Okay. So I'm going to leave this to you. And I will see you next class. And we are going to move on the master budgeting, which is one of the key components in managerial accounting, which has to do with the planning process.